Hey guys, Mike here. So I got a jam-packed video with you, and I mean it's a jam-packed video of information here. And we know as I'm recording this, Tesla and Netflix will come out pretty soon with earnings, so that will definitely move the markets in one direction or the other because they're so heavily weighted in the index and stuff. And so, in this one, we're going to talk about where our money is going and where it's not going. Two, we're going to talk about, we know there is a pullback, a healthy pullback coming, right? And so I found this chart I'm going to show you where this guy did some really good work comparing two different time frames here, and it makes sense. And the good thing is you get an idea to say, oh, well, that makes sense. That's a decent pullback, and when can we expect that? So, I'm going to show you that, and we got to talk about this AI craze. Lord have mercy. I mean, today, if you didn't see it, I'm going to show it to you. It's just ridiculous. It's getting to the point of ridiculous now. And, I'm going to show it to you because it's just crazy. And I mean, I actually made out on it, so I was happy about that. But again, those who don't believe algos run the stock market, I don't even understand what footing you're on. I got to be honest with you. And then once you see this, maybe it'll finally get you to change your mind or whatever and see the light. But first let's start off with, where's our money not going? Well, it's definitely not going into gas stations. You would think, with us traveling and everything, it'd be going there. And I'm assuming the reason why this drop has to be going on is not because we're not traveling. I don't think we're probably driving across country as much, but I mean, we're definitely flying and things like that. But, it's because it coincides with gas prices. Once they fell from like $5 to $3.50, it makes sense that, yeah, we would absolutely not be spending as much. We could still be buying as many things, but especially when it comes to gas, it has come down, even though it's still really high compared to historical standards, and that's about the average where we need to be. Now, of course, where is our money going? We know, well, it's going into air travel for sure, right? United Airlines reports today. Can't wait to hear the CEO brag about how much they're charging us. But if you look at this, this is 2019 through 2023, what do you see? During the summer months, it goes up. After that, they all decline or at least go sideways. So we'll see if the same thing happens this time. On top of that, and just keep that in mind as we, go through earnings for all the airlines and stuff. Now, obviously, the housing market, I told you guys I'll keep you updated on this. Still a hot mess. The stocks look great, but because of the shortage and stuff, this kind of shows you and lays that premise for you. When you got homes in the market at a record low of 1.3 million, you got 53% of homes require income of 120K plus, and I'll show you the data to back this up. Average 30-year mortgage at 7%. Mortgage demand lowest since 1995. Median rent payment hits $2,000. And so obviously, yeah, I can see where this is the least affordable housing market in history. And you can see right here, this lays it out. You can pause it. Income on the left. Share of homes buyers can afford right there in the middle. And you can see, I mean, that's $125,000. If you're making that 53%, right? This number used to be way higher than that. But obviously, housing prices in most areas, I know in mine, have doubled, sometimes some even more than that. And so, I don't know what younger people are doing right now. I'd be curious if you're watching this, tell us what you're doing. But you can see also, this is why the Michigan Consumer Sentiment came out the other day when it comes to housing related to the interest rates. And you've never seen anything like this. This goes back to 1990, right? And so that's just staggering. But again, I can't imagine buying homes right now, and I guess hopefully the rates will drop soon so they can refi stuff. But again, why are we having this problem? Because home listings. I'm not selling. Are you selling? Where are you going to go into a house that's twice your mortgage, twice your rate or whatever? You can see right there that people aren't wanting to sell. None of my friends are selling. None of my family members, let us know what you're doing at the bottom. And because especially if you want to sell and go into rent, look what the rent is. Like we're almost at, all-time highs again. And of course, if you look at this chart, the reason why it's important to know stuff like this, look back. What do you see going on in the summer months every single year? You see rents go up. So what's happening now? Since we hit summer, rents are going up, right? And so this is a lagging indicator. That's why I was saying for me, when it comes to inflation, it's going to be interesting to see because it takes time for this to actually creep into the numbers. But if it keeps going up July, August, September, and that's a lag effect as far as the reporting, how is that going to affect core and overall headline CPI? So that's a big question to ask. But also, I feel bad for anybody paying these rent prices because you can see when it comes to the norm, it's so far above it. It's just insane. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And now that leads us into the market, and I told you about all the VIX expirations today. So if you see a pop in the VIX tomorrow, don't be shocked. That sometimes happens. I'll show you why. Also, the good news I told you about in the beginning, got some good news, right? Got some good news. And if you look right here, 3.6 million VIX call options expired. You can see a lot of people are expecting to pop. A lot of this is hedging. Some people are just expecting to make money because they thought the VIX would go up. As you can see, calls to puts are on the bottom right there. Not even close, right? And so sometimes when you see all those call options finally expire, then the VIX is allowed to move a little bit more freely instead of just being subdued down. So just keep that in mind. Now, good news here is, I showed you this probably like 30 to 60 days ago. The top 7 stocks are only up 58% now, while the other 493 have managed to be up 4% for this year, and that is up because it was 0% last time I showed this to you. And that means people are buying other stocks besides the top 7, and the S&P's up 15%. Now, of course, why is this? Well, because the bullishness now amongst individual investors has reached its highest since November of 2021. I'm racking my brain really hard trying to figure out what happened in November of 2021. But, maybe this time is different, okay? So let's just keep that in mind. And then this was what I was talking about. This chart right here, some gentleman named Joe Fahmy did. And so you can visit his website, but he compared 2003 NASDAQ composite to 2023 right now. And he numbers this stuff out, so just hang with me on this. But you can see here, because we'll get to the point in just one second, but you can see he's got it numbered out. And so 1 is prior bear market, okay? Number 2 is low on October 10th over to the left, low on October 13th in 2022 on the right. Number 3 is a cup and handle consolidation that breaks out in April 2003. You can see that on the left right there. And on the right, you get the cup and handle consolidation breaks out in May of 2023. All right, look very similar. First visit to the 21-day EMA, late in May, right, on both sides. You can see right there, number 4. And then when we go to 5, see right there? We go to 5, second visit to the 21-day EMA in June on the left and June on the right. This would be number 5. You see it right there. And now we get down to number 6, seasonal strength during the first 3 weeks of July. Well, we've definitely had some seasonal strengths the first week of July. Now, if I scroll down, this is what we're looking for to happen now. Normal pullback to the 50-day moving average in summer. And you can see it on the left where it hit its 50-day. And then when I pull up the NASDAQ composite, you can see we're only, it looks like we're far away, but we're sitting straight down, about 7.5% away from the 50. And we know it's not going to come straight down, right? So if the 50 is going to continue to move up, let's say this continues to move up or sideways or comes down, you're looking at what would be a healthy, before the end of August, because that would be the end of summer, around 4 to 7%, somewhere in that range. And that would make sense. So we'll see if it plays out. But again, everybody's calling this pullback because you got, some stocks are way overstretched. The fear and greed index is extreme greed, has been there for a long time. Obviously, I've showed you the other things, the sentiment. When we get to these points, that's when people go, okay. And it's a healthy thing. If you're wanting this thing to continue up, that's what you want to see, right? And so this parabolic, straight up stuff, that usually comes to an ugly ending. So you want to be pulling back and bouncing off that 50, okay? And so that is normal. Now, this AI stuff, oh boy, I'll tell you what, man. I don't know if you saw what happened to Apple today, but I'm going to show it to you, then I'm going to talk about it. Look at this right here. So as I put in the Discord to the members, look at this. Now, keep in mind, this is Apple, a $3 trillion market cap stock. And within minutes, got pushed up like that, like it's a meme stock. And for what? Apple test, Apple GPT, generative AI tools to catch OpenAI. Here's the kicker. Look at the highlighted part, folks. Executives haven't decided how to release tools to the consumers. It is for their employees, okay? Not consumers. I mean, they just put this out there and go, hey, AI, boom, and the algo kicks in. That's what I'm talking about. Algos run the market. It kicks in immediately. And I guess maybe the algo read the report because immediately it sold it back off, right? Within minutes. But this is a $3 trillion market cap stock, not a meme stock, okay? Not some heavily shorted, 30% of its market cap shorted stock. It's Apple, the biggest stock out there, and look what they did to it. Just like that. Did the same thing to Microsoft yesterday. At least Microsoft, they were actually going to be making money and releasing to the consumer. This was just nothing but clickbait. Boom. And algos went, bam, see you later. And they made a lot of money going up. And I'm sure some people rolled into it, thinking of getting calls or whatever, and then sold it right back off. And so you can guarantee quant funds and all the rest of it, yeah, they made a bunch of money in that few minutes. But it just shows you the power of those algos and how fast they can move any stock. Doesn't matter how big it is, how small it is, okay? And not to be undone, here comes Salesforce. We talked about yesterday about these software stocks, no matter what the sector they're in, ends up gapping up again today. Nice big move, and it released at least something that's supposed to generate money for them, another AI tool. And so we scroll down here, you can see, and just get used to the word generative AI, generative AI, whatever they want to call it, however you want to pronounce that word. So, we'll see how that one goes. And I'm not sure how you feel about AI. Let me know in the comments. But to me, it's one of the scariest things out there. I think it can do great things, but if not regulated properly, I mean, it's going to be a hot mess. I saw some campaign ad popped up on my phone using AI. And, it's hard. It should be illegal to use in any campaign stuff because it's already easy enough to fool so many Americans already with stuff. You put AI in there, I mean, it's just a whole different ball game. But, maybe I watched too much Terminator or something. But, to me, I still can't wrap my brain around at first. I mean, first of all, AI is not new. I mean, companies have been trying for years to monetize this, okay? But the fact that if they actually are successful and really ramping up to what everybody keeps saying they're going to do, I still just don't understand how the middle class and like even, I mean, especially poor people aren't going to be crushed. I don't get it. Like, seriously, I don't understand it. I've thought about it 10 ways from Sunday. I know people are going to say, oh, well, we'll have to fix the robots. I'm like, why? Why wouldn't you just make another robot, with artificial intelligence that can fix the robots? Why would you not do that? I still don't get automizing, or making these 18-wheelers autonomous, making the taxi cabs autonomous and all that stuff. Like, where are these people going? Where are these people going? I still don't get it. I mean, why do they have to fix the trucks? You get a robot to fix the trucks, right? Doesn't that make sense? And if they're going to be, electric, it's a lot easier, right? You don't have to worry about carburetors or oil changes or anything like that, do you? And so, where's the mechanics going? I'm just spitfiring, putting it out there. But don't believe me. Believe the man himself who is at the front of this whole thing.
What's going to happen is robots will be able to do everything better than us. I'm including, all of us, Yeah. I'm not sure exactly what to do about this. This is really like the scariest problem to me, I'll tell you. So I really think we need government regulation here, just because this is, ensuring the public good is served. Because you've got companies that are racing, that they kind of have to race to build AI, or they're going to be made uncompetitive. Essentially, if your competitor is racing to build AI and you don't, they will crush you. So then you're like, we don't want to be crushed. So, I guess we need to build it too. That's where you need the regulators to come in and say, hey guys, you all need to really, just pause and make sure this is safe. And like when it's cool and we're convinced and the regulators are convinced that it's safe to proceed, then you can go. But otherwise, slow down.
And so if he don't know what he's talking about, he's been talking about this for years now. I mean, who you gonna believe, right? I mean, my own Lord. I mean, didn't he build a robot and stuff? So yeah, I don't know. Let me know what you think down in the comments. I don't know, man. I'm almost thinking like the end game or something when that whole thing gets to rolling and stuff. But anyway, now last but not least here, where is money going? And I'll tell you where money's really been going. If you look back from June 11th forward, I mean, transportation has been on fire, right? 18% almost. XLF's getting bids, XLE's getting bids. If we move forward the month, you still see transportation on top. XLF with all the banks reporting and still getting bids and stuff. XLI, you move to this week. Obviously, tech's been doing good. Financials, even healthcare starting to move back up. Transportation's still in there. And I don't know if I touched on this for you guys or just for the members video I did on this stuff, but the reason why they're going up so much, because look at all the airline stocks. And if you're flying, what else are you doing? You're renting a car most likely. So that's why this thing's been just tearing it up. Again, United Airlines report after close today and stuff. And so who else is reporting? Obviously, you have Tesla, Netflix tonight, but then you got Taiwan Semiconductors, American Airlines, Johnson & Johnson, D.R. Horton, which I think is at all-time highs again, Intuitive Surgical, Capital One, CSX, and a bunch of regional banks, okay? And as far as economic data, continuous jobless claims, initial jobless claims, the market might have a small reaction off this, but again, the reaction will come off Tesla and Netflix earnings. They also have Philadelphia Fed manufacturing stuff, which is still abysmal, but this is one of those things the market truly just does not care about for right now. And it could be because they just see, it's so bad that maybe it's bottoming, right? Maybe it's working its way out and it's going to start to come back up and stuff. And, and when it comes to orders and stuff, that's what runs the business cycle. And I'm sorry, orders and new orders and inventories, that is. And so maybe things will get better. That's kind of what they're doing. But right now they're going, whatever. The services side is crushing it, so let's just stick with that, and that's what's going on. Let me know what you think as far as like Tesla and Netflix, what you think they're going to do and how they're going to react. Is it going to be a sell the news event? Because sometimes they do that when there's big runs. Or are they actually going to kind of finally get Netflix gaps filled? Did I say that? Netflix gap filled finally, and then get Tesla up to, I think it's 318 will be the next level of resistance. So, if it does have a positive reaction to earnings and stuff. So, and the big thing about Tesla, as I was talking to members about, is going to be the margins. Because they said, I swear he said they'd never get down to legacy automotive gross margin, I believe it is, and they're getting pretty darn close as far as I can tell. And so it's going to be interesting to see how the market swallows that for now. So anyway, hope you guys got some out of it. Hit the like and subscribe button if you did. And I will see you tomorrow.